If you've ever stared at a red account at midnight wondering where you went wrong, stay, because what comes next will change how you trade forever. $2,347,842, the largest single payout in the history of proprietary trading. And the man who received it closed his laptop, took a breath, and prepared for the next trading day. No celebration, no screenshots, no champagne. Now let me take you back. 4 weeks earlier, same man, same desk, $130,000. The question isn't how he made $2.3 million, it's why he almost didn't. Before we go further, I need to ask you something directly. When was the last time you blamed the market for a loss that was actually yours? Think about that. Really think, because the answer tells you exactly where you are on this journey. Chapter 1. The Record Holder. Before Kane held the record, he sat in a cubicle. Monthly sales targets, a tie he didn't choose, a paycheck he didn't love. Not a bad life, just a capped one. And then came crypto. Big wins with XRP. 2 a.m. gains, the phone glowing in the dark with green numbers. He felt invincible. Quick question, and I want you to answer this honestly. Have you ever felt invincible in a trade? Like you'd finally cracked it? Comment below. One word, yes or no. There's no wrong answer, just an honest one. Jesse Livermore said it a century ago, and people keep forgetting it. It's not the market that beats you, it's your own complacency. Kane didn't need to read Livermore to learn this. He paid tuition directly. Chapter 2. The Collapse. 78%. Not over years, not over months, in days. FTX collapsed, withdrawals froze, and in that silence, 3 a.m., cold screen light, the fan of the computer the only sound, Kane sat with the number. And here is where his story separates from almost everyone else's, because in the silence after, he didn't blame crypto. He didn't blame Sam Bankman-Fried. He opened his journal and wrote one word: complacency. Chapter 3. The Pivot. Here's a number that hit Kane harder than any loss. During his crypto days, he calculated he was making $1.09 per hour when he factored in every hour of screen time, millions in volume, pennies per hour of actual life. So I want to ask you something. Have you ever calculated your real hourly rate of the trader? Comment A if you've never done this math, or B if you know exactly what each trading hour costs you. Most traders have never done this, and that avoidance is itself a choice. Futures gave Kane what crypto never could: a schedule, a chess match with rounds, boundaries, and boundaries gave him something more valuable than any indicator: rest. Rest gave him clarity. Chapter 4. The Edge. The market tells the same story every day, every session, every chart. Accumulation, manipulation, distribution. First, the market gathers strength quietly. That's accumulation. Then comes the deceptive move, the sweep that traps the impatient. That's manipulation. And finally, the real direction delivers. That's distribution. Now add SMT divergence. When NASDAQ breaks a high and the S&P refuses to follow, that divergence is the market's unconscious twitch. It reveals what's real and what's manufactured. And psychological price levels. Round numbers feel safe to retail traders. That's exactly why institutions hunt stops at those levels, like predators at a watering hole. Which round number has burned you? Comment the level: 4,000, 100, 15,000. You're not alone, and now you know why it happened. Chapter 5. The Twist. Here's what nobody tells you about Kane's story. He discovered this edge months before the $2.3 million payout. He backtested it, he confirmed it, he watched it play out in live markets perfectly for months. And he was too afraid to use it at full scale. His October journal reads, "Setup was perfect today. Again. Size at 20%. Should have been full. Why didn't I go full?" 2 weeks later, quarter size. Again. 2 weeks after that, watched it hit the exact target, at 20% of what I should have traded. And here, right here, is the part of Kane's story that nobody talks about. The edge was never the problem. It never is. Now, if you're still watching, congratulations. Not because you're smart, because you just demonstrated the rarest skill in trading, the ability to sit with discomfort without running from it. You stayed through the hard part. Most people clicked away before the twist. You didn't. That impulse control, right there, is the beginning of the edge. Chapter 6. The $1 Million Trade. December. The morning everything aligned. Daily bias, bearish. H4 confirmed. Key level, 15,250, both a psychological number and the previous day's high. 9:30 a.m. The market opens. 28 minutes of nothing, just noise. Kane waits. 9:58. NQ begins climbing toward 15,250. Chat rooms light up. Breakout confirmed. Load up. Thousands of retail traders pile in, seeing what they want to see. Kane watches ES. It refuses to follow. SMT divergence. Confirmed. 10 a.m. NQ pierces 15,250, and instead of accelerating, a wick, a massive rejection. The power of 3. Manipulation complete. This time, Kane clicked. Those 2 words carry the weight of every time he didn't. Every time he saw the setup and sized at 20%. Every October entry where he watched the target hit and then wrote, "Why didn't I go full?" in the margin. This time, full size. Then, the waterfall. Price didn't just fall, it collapsed. By the time he exited at his predetermined 50% retracement, over $1 million. One trade, one session. His reaction? He immediately reduced his risk for the following week because he recognized the smell of the poison. Complacency. The same word from his journal, the same word from the ruins of FTX, the circle completing. Chapter 7. The Mind. I'm going to ask you something directly now. Have you ever known the right trade, seen the setup clearly, known exactly what to do, and still not taken it? Comment yes or no. And if yes, know this. You're in the same chapter Kane was in during October. The edge isn't the problem. It never was. The problem is the belief that you deserve to use it. Kane conquered 4 fears. Fear of being wrong, fear of losing money, fear of missing out, and fear of leaving money on the table. Comment just the number, 1, 2, 3, or 4 for the fear that owns you most. There's no wrong answer here. Recognition is the first step out. His discipline looks like this in practice. He can sit in front of a live market for 6 hours, watch price move, watch chat rooms explode with breakout calls, and take 0 trades, because 0 conditions met means 0 trades. And he marks that day successful. Protecting your powder, because fire all your bullets at shadows, and when the real target appears, you'll have nothing left but regret. And when the drawdown came, 15 losses in a row, all controlled, all within risk parameters, he had a letter, written to himself during a winning streak, addressed Future Kane. Opening line, if you're reading this, you're in a drawdown. This is normal. Your edge still works. He read that letter, reduced size, took 3 days off, trade 16, winner. Drawdowns don't measure your skill, they measure your character. Chapter 8. The Legacy. A trader Kane knew passed 23 prop firm challenges. 23! When Kane asked how much he'd actually withdrawn, the answer, -$8,000, more spent on fees than ever earned in profit. A professional challenge passer, not a trader. I want you to do this math right now. Total fees you've paid to prop firms, total profits you've withdrawn. Comment the net. No judgment, just honesty, because that number is the most important number in your trading career, and most traders have never calculated it. Prop firms are tools, not careers. Use them to scale what you've already built, not to discover whether you can trade in the first place. And his final 6 lessons, stripped to their bones. 1. Treat trading like a profession or it will treat you like a hobby. 2. Build a strategy that fits your psychology, not someone else's. 3. Risk management is the difference between surviving and not surviving. 4. Psychology is the real edge. Everyone sees the same charts. What separates winners from losers is what happens between your ears. 5. Be boring. Be consistent. Be mechanical. Let exciting be for spectators. 6. The moment you think you've figured it all out, the market begins planning your humiliation. Stay humble. Stay curious. And this is what Kane said that his students remember more than any setup. The market is not your enemy. It's your teacher. Every loss is a lesson. Every win is a test. The question is not whether you'll make money today. The question is whether you'll still be here in 5 years, wiser, calmer, freer than you are right now. One last question, and I want you to sit with it. Are you trading to make money, or are you trading to become someone who deserves it? Comment your answer. I read every single one. Your challenge: For the next 5 trading days, 1 trade per day, maximum, only if it meets every single condition in your system. 0 perfect setups, 0 trades. Track how that feels, track your emotions, track your results. Because here's the truth. If you can't do this for 5 days, you're not trading, you're still gambling with better vocabulary. And if you know someone sitting alone right now with a red account and a question in their head about whether this is worth continuing, share this with them. Because sometimes one story told at the right moment is the thing that keeps someone in the game long enough to figure it out. The market is waiting. Show it who you've decided to become.